videos. So I'm going to ask you about some of the sectors you think are pretty beat up. Specifically, I'm going to start with the cruise sector, cruises, Carnival cruises.
Cruise lines, Carnival cruises.
And would airlines, would you differentiate them? Would you differentiate airlines, casinos, hotels, cruises, or is that all the same to you? And how do you measure them? And which one do you kind of see bouncing back first?
Yeah, so those are good questions. There are a lot of questions in there. So first of all, the way we would invest would be we tend to stick with in the model portfolios that we run for clients at CANACCORD. We really stay to high quality companies, industry leaders. So some of these sectors that are really beat up, we would tend not to go into those areas with our model portfolios. Part of the challenges here, obviously, this is an area of the economy which is highly discretionary. So I think the way that your viewers may want to think about, let's say, pick airlines, for example. I read earlier today that airline traffic is down 95%. Not surprising. I guess the other 5% is just cargo that, it's all those Amazon boxes and stuff that we're buying and getting dropped at our door. I think the way you should think about investing in airline stocks is, a year from now, 2 years from now, are we going to be flying again? Absolutely. But, how quickly the economy comes back, we really don't know. And if your view as an investor is that as soon as we're allowed to leave our homes, we're allowed to spend again, we're allowed to travel, and you think that the economy is going to come back quickly, then yeah, take a shot at some of these airlines or some of these cruise ships. But if you, as a business owner, and many of you that are watching this show probably know better than myself, that getting a business back up and running, whether it's a manufacturing plant or a corner store or a restaurant, that's going to take a little bit longer, and bringing airlines back online is going to take time. Then I think these companies are going to not necessarily, the revenue is not necessarily going to bounce back. And I would just leave you with this one thought, and that is, Warren Buffett, considered one of the greatest investors of our time. He actually owns 2 airline stocks, Delta and Southwest, and he was actually a net seller, which is highly unusual for somebody to be selling it. So if that's pretty hard to find anything that's more levered to an improving economy than an airline, and he's a net seller. So I guess from my view, and being somebody who really respects a guy like Warren Buffett, I would be really caution the viewers on whether to go into airlines or cruise ships. Will they survive? Absolutely. Whether or not equity holders will be rewarded, I'm just not sure.
Yeah, on that point, there could be so many scenarios. We saw it with the banks in 2008, 2009, the US banks in 2008, 2009. Everyone kind of thought, I shouldn't say everyone, a lot of people thought that they were too big to fail and they're going to come out, scot-free. But what ended up happening in the US, I think of the case of Citibank. They ended up getting diluted so much with the bailouts that the stock basically went to zero, right? Even though they survived and they rallied out of the market, what did they do? Like a 40-for-1 negative split or something like that. And the stock just never recovered. And that's a situation where the company might survive, but if so much money gets pumped into that company at pennies on the dollar, you end up getting dilution. So shareholder dilution, and you can't bounce back from that.
Yeah. And what I would do is caution your listeners as well. Like, a lot of people are quickly going into the bank stocks here. And what a lot of companies did, including the airline companies, is as soon as there appeared to be this virus sort of picked up some speed, everybody pulled down on their lines of credit because they had learned that from the credit crisis. So I would just caution your listeners that, the banks are exposed, greatly to the economy here. And, we have analysts that cover Air Canada, for example. And one of the reasons you want to own Air Canada right now, or at least they're proposing, is that they have a lot of cash. Well, they pulled that cash from the banks. and most of their planes are on the ground. So a lot of the risk associated with Air Canada just got shifted into the lenders. So I think you just want to be a little bit more cautious, maybe than you have in the past. And I'm sure we'll talk to some of the areas that we're more more positive on in areas that people can invest. But I would just highlight that even the private equity guys who have companies that are manufacturing, they told their companies that these are non-public companies to pull down on their lines, get liquidity wherever you can, because you just don't know how long this virus and the slowdown in the economy is going to persist.
Hey, let's go right to the kind of breaking news. Not that I'm,
sure. Yeah.
Boris Johnson. I don't know if you guys, the viewers, have not seen this, but Boris Johnson got admitted to intensive care. So I don't know if that's different than ICU. I think that's ICU. Maybe they have a different word for it out there. But what do you think about a leader of one of the largest economies in the world getting impacted this negatively by COVID? And nobody ever wants to think. The follow-up question is, nobody ever wants to think of anyone dying from this. But bigger picture, if a leader were to die from this, what impact do you think that would have on the market, just emotionally?
Yeah, that's a great question. I mean, clearly, your initial thought is the market would sell off. I think that he's one individual. He's part of a larger decision-making process, and as these country leaders and presidents and prime ministers get up to speak, they really are relying on a large team and domain experts. And so I think maybe the initial thought would be as if he were to pass away. They'd obviously be tragic, but I think the market would look through that pretty quick and get back to kind of the general improvement in cases, what's actually being done, and kind of get back to kind of the matters at hand rather than just focusing on one individual. And even though that person is in a position of tremendous power. So I think it's less relevant than we might think.
I was thinking today, I was chatting with another one of my colleagues. I was saying, I feel like the politicians are, I feel like I've been really good at social distancing. I'm not shaking hands. I'm not touching anything. I wonder if it's tougher for them because they're so used to shaking hands and kissing babies and touching stuff, and they're in the public eye. And, no one's immune, obviously, if Boris is in the hospital because of this. I do want to take a sec to talk about some good news. I try to do this in every show. Couple bits of good news for you guys. First of all, Kevin, I heard that haircuts are going to be essential services.
I'm going to need one soon. I saw a friend of mine. He was joking about his wife cutting his boy's hair, and he said, "I'm not ready for my wife to cut my hair."
I don't know how you're going to function. I don't know how you're going to function without a hair. But no, you look great.
Everybody's going to have long hair in a couple months, I think.
I took the old scissors and cut my own hair this morning. I'm actually admitting
Looks
that.
Great. Looks great.
It's getting weak up there. There is some good news though. Germany, they're now making plans for what the post-lockdown looks like. So, they've had, I think, a really good effort of flattening the curve. Speaking of flattening the curve, the U.S. in New York, it looks like they may, there are a couple of articles saying that they may have flattened here in New York, the cases. I think the deaths are still expected to rise, but at least the cases may be flattening there. And then we're seeing the opposite in Spain and in Italy. We're seeing kind of reductions in deaths. That's all good news across there. How do you figure the market reacting to that? And when do you think, people are always asking me the bottom, and I'm not going to ask you where the bottom is, but do you see the bottom coming? Obviously you see the bottom coming before the flattening, I would imagine.
Yeah. I mean, this is a very difficult question to determine, but one of the things we did, and we sent it around, but we looked at the example of China, and we said, what we did was we looked at a couple of charts and said, okay, when does the market sort of bounce with the cases? And really what happens is we found that once the cases start to flatten out, so really the second derivative, so not that they stop, but that the rate of change flattens. That's really when the market starts to look through it and say, okay, the worst of this is done. And I think that's exactly what you're starting to see in Europe, and to some degree market's up 7%, 6 or 7% today.
We're going to talk about that.
Yeah, you're starting to see the market look through that. So we have a couple of examples, or we'd say China. We've also got South Korea. We've got Taiwan, where all of these countries have done arguably a better job than the US or Canada or Europe. But you can see how, and even in Italy, for example, the cases, incidents have slowed. And once they slow, the market begins to look through that and realize like probably the worst is done. And so that seems to be at least one point that the market looks at in terms of, and to your point today in Germany, we're starting to see, thoughts of, okay, what does kind of post C-19 look like? How might we envision people getting back to work? So all of these are very constructive for the market.
Yeah, and I would think, we talk about the bottom all the time. I've talked about it many times on this show. We still think there's another leg down coming. We still think earnings are going to be extremely negative, and there's going to be a lot of negative sentiment. There's a question online here that I'm reading from my phone. What do you still see the markets? Do you still see the markets visit new lows after today's surge? I kind of think that if you think that we're done, wow. I feel like that was remarkably easy. I know it was extremely painful. But like, if we're done, if that was the bottom, like to me, it's almost that it was too easy. And I know it was extremely painful, folks, but it's almost too quick. I personally, and I'm going to say it again, and Kevin, I'll ask your call, but I'm of the Tony Dwyer school of thought, where the first panic phase down selling happened real quick over like 18 trading days. This is now we closed today at a 17 business day high, almost a 3-week high, almost a 4-week high. We're up 1,600 points at the end of the day here, 1,627, which is almost 8%, Kevin, on the Dow, 7% on the S&P. I do still think there's a leg down. How do you see that playing out?
Yeah, I mean, we have a number of strategists at CANACCORD. They have different views, obviously. Our US strategists would see what's called a retest, or a test of the lows again. Our technical analysts would be more positive. And so I think it's a little bit early to call the all clear. From my vantage point and the things that I look at, I would say we're 1/3 of the way through. So typically when you look at market bottoms, whether it's 1987, the credit crisis, 2011, there's a number of these. Most of them, you spend a period of time on the bottom. It can be kind of 40 trading days, and typically there's a lot of volatility. And the way you measure volatility is through the VIX. So the VIX has come down a lot. This has been one of the fastest declines we've ever seen, comparable to 87. But typically you need to spend some time at the bottom down here. And so I think it's a little early to call the all clear. Keep in mind, we have some horrific economic data that's coming. Janice Yellen today, I read something where she was speaking. She thinks that GDP in the US is going to drop 30%. Unemployment rates could be in the 17 to 18%. Now, the market may already be looking through this and looking into 2021, but we still have a lot of tough economic data. We're just about to enter Q earnings season. So, all of the guidance has been pulled by companies. We're going to start to see companies reporting where they have half the revenue and all of the costs. So it's going to be interesting to see how much the market looks through that. But from my vantage point, I would say we're about 1/3 of the way through the bottoming process, and a little bit early to call the all clear.
I really like that, a third of the way through, as in time relative to distance from the bottom. I think that's just a really neat way of looking at it, because distance from the bottom, we prognosticate, but like that's almost impossible, right? Like that's effectively that's effectively impossible. I do like the fact that the damage, time wise, is really, really important and relevant. I'm going to ask you about just a bunch of questions are coming in online here on the YouTube page. Does it feel like the market is getting a bit of ahead of itself today? My view on that, and I think we probably Do you see the markets visit new lows after today's surge? A lot of questions about today's surge, but
I can
the
think a little
market,
bit to that. I mean, I think what you're seeing today in today's market is there's obviously the market is getting comfortable with some real resolution between Russia and Saudi Arabia. And part of that, like lower oil prices is really good for the overall global economy because we spend less money, but really low oil prices is really bad. So if we can kind of get back into the 30s, that's really good. Everybody kind of makes money. And what people I don't think fully appreciate is that if Russia's incredibly dependent on the revenues associated with oil. So, there's some geopolitical risk associated with oil being down here as well. That Russia might cause some kind of conflict in order to get the price of oil up. So some clarity there, I think, is really good. Keep in mind there's a whole Canadian piece. Companies are really not functioning well when oil's sub 25. The U.S. shale players there's a huge problem with the U.S. shale players. And what happens is if the U.S. shale players have actually borrowed a lot of money. They borrowed a lot of money in the high yield debt market. So if you can bring resolution to the U.S. shale guys, you also bring a certain level of resolution into the fixed income high yield bond market. So there's a lot of things that kind of are getting fixed and sentiments improving, like in the high yield market. And then I think also that the comment out of Germany was really constructive. The rates in Europe seem to be slowing. So there's sort of some resolution there. That I think that's what you're seeing inside of the market today.
yeah, I think I would agree. And the FOMO is definitely happening, right? So when the buying starts happening,
yeah,
I had some clients today call me. We had set, so for us, Kevin, with respect to targeting and buying, what we're doing for clients. And my clients, most of my clients know this, but for the viewers and the ones that aren't clients, if you gave us cash in the last month and you're like, Rob, I'd like you to buy this kind of at the bottom here, we put about half to 2/3 to 80%, depending on how big the account was, last Thursday, the last time I did that. So most of that money went into the market just because we wanted to be in. We wanted to have a good chunk of that in, and if the market just keeps rallying, well, we have most of that invested, and that's going to be a really, really good purchase. And if it doesn't, we still have a bit of ammo for a further leg down. But so we believe that. So we've been doing a lot of buying. We've believed that there was opportunity to buy, but the ones that we had set some specific targets, either clients that wanted to, leverage some more, or clients that would call me if a certain target hit. Those targets didn't hit this week, right? And now I'm getting the calls, did we maybe miss out on that? Is it possible that we missed the bottom, Rob? So I think that's what we're seeing today. Part of the 1,600 points, at noon it was, like 500, 600, and then you get the last rally in the last hour. Was it on heavy volume? I didn't see there, Kevin.
Yeah, I didn't get a chance to look.
Okay.
Yeah.
Okay, so good. Let me ask you about, by the way, keep the questions coming online. There's a comment that the U.S. new cases are 7% versus Germany 1.8 and Italy 2.7. I'm going to ask you about, please keep the questions on Facebook coming, keep the questions on YouTube and online coming. I want to ask you about sports. I'm a big sports guy. You were at the Belarusian soccer league was playing, I think, last week. No, I'm not kidding. They were still playing.
Really? Eh?
Yeah, they were like, be damned, we're gonna play some soccer. They had like 3,000 people in the crowds. There's that, and there's WrestleMania, I guess.
Yeah, I saw the headline for that. I didn't see how they did it or if they did it.
Do you think? I sent you a link to an article on the Globe and Mail. It was an opinion piece. It says that this guy thought that we're not going to see any sports till 2022. I remember when I was a kid, I remember looking at the back of the Stanley Cup videos and seeing that they missed the Stanley Cup in 1918. And I remember thinking, like, how is that possible? How could you miss a Stanley Cup?
Yeah.
Like, it's the most important thing in the history of the planet, the Stanley Cup championship. Why would they miss it? I couldn't understand it. And now, we're faced with the very real possibility that's not happening this year. And who knows? When do you see the next sports championship trophy awarded? Do you see us missing an entire year here? And how do you see that playing out?
Yeah, it doesn't look good. I saw somebody, write an article about if we were to get back in time, they should do kind of a March Madness type round, like one game, one elimination, which I thought actually was pretty good. But you know what, it's to bring these athletes all back. It's going to be a major endeavor. Some of these guys haven't skated. Like who's skating? Nobody's skating. Everybody's home. I know these guys have big gyms and stuff, personal gyms and stuff, but just to get back on the ice in the case of hockey, get it, drop a travel schedule, arenas, whether people will come back out, I just don't know. So, I mean, I think I know in the conversations we're having internally in our company, we're sort of guiding to maybe beginning of June, and then you could easily see that school's going to be out, so it's probably September when we're kind of all back. So it's hard to imagine that there would be any kind of a, call it Stanley Cup, or some of these other sporting events. So
do you see them going back kind of in tranches where they'll do kind of the empty stadiums first, and then eventually let us go see sports?
Yeah, it's a good question. I think the NHL as well as the NBA, and you got to give the credit to the NBA to being the very first to kind of cut the season or put the season on pause. I think they're going to rely heavily on the health professionals, and to just look for guidance, like that this is really outside of whether or not the NHL or the NBA wants to host events is almost supersedes the public health and their direction. This is so much bigger than a Stanley Cup or anything else, and I think people recognize that. And it's going to be interesting to see, like, after we've had all this social distancing, I don't know how. I'm probably pretty comfortable sitting in a stand beside somebody, but we're all now being sort of trained to stay away from people, and all of a sudden we're all going to squeeze into some seats in a hockey rink or watch a basketball game or something. It's going to be quite a change, I think.
On that point, do you see business as we did it in 2019 changing because of COVID? I mean, I'm thinking for myself, I was not a stranger to the one flight meeting, right? You fly, you go to Toronto, you meet with one important meeting or maybe two meetings, and you fly and you come home, and how expensive that is, how not good it is for the planet and all that. And this COVID, do you kind of see that maybe changing over time, where people are going to do more of this and people will be willing to accept that, and then some industries suffering?
Yeah, I think so. I mean, the big eye opener, I think, for many of us is just how productive we can be in our homes, and I think eventually much of it will come back. So I think of 9/11. I was in New York for 9/11. I remember people talking about how air travel is forever changed, and people were going to do more teleconferencing. People were going to be worried about getting on planes, and I think the only thing is, I think about that was many years ago, but think if air travel came back, probably people were more mobile than they've ever been up until this hit. So even though all of this technology was available, we were quite quick to get on planes even after 9/11. I think the one hangover with 9/11 is just all of the security that happens. A lot of that checking, but and so as much as we might be sitting here trying to think about how the world's going to change, my natural default is that it probably is not going to change that much. There will be a few things. We'll probably not stand as close to people in line, but I don't think it's going to be 6 feet when we queue up, whether it's at McDonald's or Swiss Chalet or, at the airport. We might leave a little bit of extra space. And people still want to see, there's a certain amount of business that gets done face to face. People do business by relationships, and you can't just replace it, even though this is a great medium to use. I think the world probably doesn't change that much. It might take a little longer, but I think we're probably all going to fly to somewhere sunny. Maybe we'll wear a face mask, maybe we won't. But I don't think the world's going to maybe change as much as we think.
Yeah, I'm an optimist on that front too. I'm an optimist in kind of everything I do. I'm certainly glasses 3/4 full, never mind half full kind of guy. I do think business is going to get more back to normal than our worst case scenarios right now and our fears. So I'd probably concur with your statements and your comments. I got a question here online about Bill Gates' death toll prediction. Not sure if you saw this, but Bill Gates made a comment that he thinks there'll be less deaths than the Trump administration forecast of, I think they said 100 to 250,000. What do you think about Bill Gates's kind of coming out here in the last while and talking about this? And he had a comment that said if he were president, and I think a lot of people said that'd be cool if he was president.
Yeah, another billionaire. Apparently, you have to be a billionaire to run for the president of the United States now. Look, Bill Gates is an incredible individual. I mean, when you think of, few people have started a business, and it takes a certain kind of person to start a business, takes a certain kind of person to get that business to 100 million, to 200 million, to $1 billion. Just think of all that he's been able to accomplish and the wealth that he's created. And then, to his credit, to step away and focus on philanthropy, and he's trying to solve. Gates has been thinking about AIDS, has been thinking about a lot of these diseases for a lot longer than I think we give him credit for. And I have some friends that work for World Vision, that work around the world, and have very high regards for the Gates Foundation. They hire very, very good people. They understand what they're doing. They play well with other NGOs. So, when Bill Gates speaks, he's careful, and he's very thoughtful. And I think, be hard for me to comment necessarily on the specifics around him saying there's going to be fewer deaths, but because we just don't know what the assumptions that went into the U.S. But I think he's a thoughtful individual, someone that we should listen to, and he's been thinking about pandemics for a long time, and he's giving TED Talks. People can see them on YouTube. So I think he's somebody that has is very, very thoughtful and has a certain level of domain expertise in it.
Let me ask you about a piece you sent me today that I actually sent to my clients. It was a piece that was titled, I think, 87. Like, I think that the title was, if you invested just before the crash in 87. So,
yeah.
And you rode the crash of 87 all the way down. And then you rode the crash, the tech wreck all the way down. And then you rode 2008 all the way down. And then you rode this thing all the way down. What was the compound annual growth? I think it was 9.5% or something like that.
Yeah, I think you would be up. So the idea of the chart it was over 33 years, which is arguably a very long time. But the idea was that if you take the full impact of 1987 and then you'd ridden that all the way up and had all these corrections all the way along, and you'd ridden this
so the top to the bottom, basically.
So, yeah.
So the top of 87, just before the top of 87 to
the
kind of
the full force of today, you're still up 20 times or 22 times your money, which is 9.5%. And so a lot of, I sent that out to our advisors on the weekend. And really the idea there is that you need to stay in the market. These pullbacks they don't feel good. They're hard. But the idea is you need to stay in them, because as we're seeing today, you're up 7%, and have a longer term view. And you
cannot miss those big days. You just can't afford to be out of them. The opportunity cost to be out of those big days is extremely expensive.
Yeah. And so the key is to, for people that are listening, that really the key is to work with somebody like Rob, develop a plan, make sure, understand what Rob will do really well for you is to understand your risk tolerances. Because obviously, if you're in the market and it's too stressful, you're not going to stay in that trade. But if you sit down with Rob and you go through your risks, so that and you properly anticipate these types of pullbacks, Rob can help you through them, keep you in the market, so ultimately you can generate, an above average rate of return that you can use for retirement, that you can use to help your children, that you can go on a holiday, like all of whatever the financial goals that you're attempting to achieve can be met, but with a plan. And it's really important to have a plan so that when you do hit these air pockets, you don't panic out of it. And really, that was the central thesis of that chart that I sent out. And for people that want it, please reach out to Rob. He can get it to you.
Yeah, I think we've talked a lot. I've preached here and I've preached to my clients a lot about patience, but sometimes it's important to understand why that patience. I think the last thing you want from your advisor is that every time you call them or every time you call her or email them, they simply go, shut up and stay calm. Just trust me. I got this, leave me alone and stop calling me. That's the last thing we want. And because that's not what you should want with your advisor. There's a question about rebalancing here. And I'll get to your question in a sec, Peter. I want to ask, Walter's asking a question about rebalancing. If you had a long-term horizon, that would make sense, but otherwise you would rebalance a portfolio, would you not, is the question. I want to get to rebalancing because an important thing happened to me today. I had a client, I had a call with a prospect at another institution, had a lot of wealth with the one institution. The guy owned one mutual fund, and it was that bank's balanced mutual fund, one mutual fund. And he asked me, he said, how do I, now that the market's down, what do I do here? How do I rebalance? And in theory, it happens inside the fund. But what I told him is that's unfortunate because you're drawing down income right now. You can't sell your fixed income or your GICs or your cash and keep your equities. You're selling all of the fund, right? So if you want to actually pull out, enough money for the entire year, you're going to have to sell your equities, which is unfortunate. So, but the answer, the question was about rebalancing. Hopefully that point made sense, Kevin. I didn't lose you on that, but I'm a big believer. Like you need to have fixed income, you need to have equities, and if the stock markets are high, you sell the equities to sell people their cash. If the stock market is low, you sell your fixed income and you get them their cash so that they need to live off of. And this is the big reason why the day you retire, you do not need to go 100% GICs, right? Because what would you be getting in a 100% GIC portfolio now? Like 1%, 1.5%, 2%. It likely will not meet your income need, whereby even if you time the market the worst possible way, you bought right before 87 and you sold now, you still made 9.5% compounded. So to answer your question about rebalancing, Walter, and then I have a question for you, Kevin. Obviously, we're constantly rebalancing. We're rebalancing regularly. We've been doing some rebalancing here in the last couple of weeks. So it's something that we do and we have to do for all clients, and it's happening. Question about sectors, KV. What sectors are
one of my favorite sectors?
And if you had cash to deploy, do you do it now or do you wait for the next leg down? And if you feel like you've missed the lows, is it too late to get in?
All right, so there's three questions. So let me start with first I'll start with the sectors. So I'm of the opinion that you buy strength. So I'm a trend follower, momentum investor. One of the reasons why I follow trend following, and you can look that up, is it works really well. So I tend to be an investor who buys strength. If you're willing to buy strength in the S&P 500, technology is the strongest sector. So I would stick with companies like Apple, Microsoft. These are the high quality companies. Adobe's another one. These are think about if I took your computer and your phone away, you probably have an iPhone and you probably are running some kind of Windows. How productive would you be in a given day? Pretty hard. So I would say with technology, another area that's doing really well right now on a relative basis would be healthcare. Not surprising. Companies like J&J, Bristol Myers, United Health is a health insurance company. So those are some really high quality companies and sectors. Consumer staples, the Walmarts of the world, the Costco's, also very, very strong. And in communications or telecom. So something like Netflix is doing very, very well, but also, companies like AT&T. So communications. So those are some of the strongest sectors. Not surprising, energy is very weak. Utilities has also been very strong. It's more of a defensive area. In terms of Canada, the sectors that have been strong have been utilities. Again, not surprising, telecom. Those would be the BCEs and the Teluses of the world. And then also technology. So you're looking at companies like Constellation Software, OpenText, even Shopify has been a very strong, been very, very strong. And these areas have been stronger actually than, obviously energy been very, very weak. Gold has actually been a very strong space. So when you look at materials, base metals, so copper has not been strong. But
Kevin is checking a chart on his phone.
yeah, sorry, no, somebody's calling me.
Popular
Yeah,
guy.
so those are be the stronger areas in the market.
Would you? And then the follow up was, would you invest it now?
Yeah. So here's how I would approach it. If I had $100, what I would do is maybe divide that into 3 chunks or even into 4 chunks. So I would put 25% to 30% of your money in the market right now. Then if it pulled back, I would add more. And then, so think of it almost in terms of days or even in terms of markets. So, everybody's worried right now that they've missed, a 20% move up. But you know what? If we go look out 3 years from now, and hopefully your time horizon is longer than the end of this year or into next year, a missing of 20% from the bottom up right now isn't really going to matter. So, I would say put a portion of your money to work now, a portion of your, in the next 30 days to 40 days is going to be really important because we're going to get a lot of news, economic data, as well as, how the virus in the cases are going to proceed. But, if you put 20% or 30% of your money in this market and it dropped 20 points or 20%, that's another way to think about it. How would I feel if this market dropped? And maybe you could put half your money in and you're comfortable with this market dropping another 10%. One thing I would say is nobody gets the bottom. Don't try to pick the bottom. Split it up and buy a little bit as you go. And then you're going to be kind of approximately right. And you know what? Statistically, 2 years from now, 3 years from now, the market will be higher. We know this virus is solvable. China's given us that example. There's many countries that are through the worst of it. So it's going to get solved. One thing I would say is never, ever bet against the US. This is a country that in the midst of World War II put people in a room and said, you got to split the atom. They figured it out. In 1962, JFK got up and said, guess what, guys, we're behind in the space race. Guess what?
We're putting someone on the moon.
Right? So guess what they got to do now? They got to build, ventilators. I think they got this. They're going to figure it out. So, don't get too bearish. America has some of the best technology, some of the greatest innovators of our time. The best companies in the world are located there, and it's going to be pretty amazing once you get out. So don't worry about missing the bottom. Put a little bit of capital to work, and we're going to be higher in 15 months to 2 years.
Yeah, I think I'm going to just save that soundbite and play it again when the markets are down. And I'll be like, hey, Kevin said this is going to come back.
Don't ever bet against America.
No bet against America. I'm a big believer.
Yeah.
So I don't know the word that you use, Kevin. We describe that as legging in. That's exactly what we do with our clients' money. We leg in money over periods of time, either time or market movements. So if you have $100, you definitely don't want to miss this, right? So at some point you're going to put it in over time. And if the market corrects, you put it in as well. If you're not sure how legging in works and you want to know how it works, give us a shout if you're a client, or if you're not a client, you want to understand how it works. Because I know how they do it at the other firms. I know how they do it. I've seen it. They plop that money down into the, whatever cookie cutter portfolio that they have, and you get plopped down on the day you send the money. So it's not how we operate. We're obviously bespoke and custom. So really pleased about the answer here. Some of the people. I'm going to ask you about the election, the 2020 U.S. election. Okay, is there a situation? Is there a situation where you could see it being delayed or altered? And I know it's constitutionally entrenched. How would that play out?
Yeah, I mean, they're kind of making it up as they go a little bit here. I don't know. I mean, I've seen articles written about how you could mail in your votes. You know, they in order to get part of this this stimulus package approved, they made some allowances for people to vote, you know, by phone, etc. Now these are obviously you know, senators and elected
For the
representatives.
primaries.
Yeah.
You're talking about for the primaries, or you're talking
Yeah,
about
no,
for...
I'm just talking about like constitutional.
Okay. Yeah.
Yeah. So I think it's too early to say. You know, I think what I'm confident is they'll figure it out.
Trump cancels election. He's staying for 4 more years.
It's kind of like the Raptors. If they don't come back and play the NBA Finals, the Raptors will be champs for 2 years.
Yeah, for sure. I want to ask you about stimulus.
Yeah.
Okay, so this is a question that came online. When I started doing these lives, I was talking about how in the First World Wars, we spent up to 20, 25, 30% of our GDP to, like, you know, solve the forces that were happening in the global situation back then, Nazism, etc. And I said, you know, we're nowhere near spending that. Japan just announced overnight that they're going to do 20% of their GDP, I believe is 100 billion USD, I think it was. No, it would have been more than that too. Whatever. It's just 20% of their GDP they'll be spending on stimulus and on monetary policy. So, you know, the US and Canada are a little bit behind that. But, you know, how do you think the governments generally have handled the announcement and the timing of stimulus and QE, quantitative easing?
Yeah, I mean, I think they've learned a lot from the credit crisis. So I think what we've learned is, and you saw them act very quickly, like they cut rates. And I remember initially when this started, we thought, wow, what does the Fed know that we don't know? Because they moved really quick. And then they went, and if you remember, they cut to 0. And that same day, the market just collapsed. And I think the market was like, you know, what's happening? Like,
what do they know that we don't
know? Yeah. And so really just kind of step back. So I think policymakers are much more willing to get in front of this. And even the Bank of Canada said they would be willing to go to negative half a rate in their last, you know, announcement. So I think where it differs than, say, the credit crisis, and the numbers are big. And the reason the numbers are big is because we've never, ever put the entire economy on pause. And I'm going to use that word pause because this is very different than a depression or a recession. So keep in mind, like, if we put the economy maybe at best on pause for 1 quarter, we might be spending 30 or 40% of our GDP, but it's for 1 or 2 quarters, because we know we're going to solve this virus. Eventually, everybody's going to go back to work, and the economy is going to come back. So, as much as the numbers, like, people say, "Hey, this is a big number," and it is a big number, but it's not a big number indefinitely. And you got to realize that once the economy gets back on and everybody kind of gets back to work, and we can have a conversation about how long that takes, the government's not going to be, you know, it's not going to be 20% unemployment or 30% unemployment, and the GDP is not going to be down like 30%. Like, just think about you and I and everybody on this call. Like, we're all going to go get our haircuts. You know, my wife's going to go get her nails done. You know, we're going to go probably out for dinner. You're going to buy some bottles of wine. We all do that together. GDP is not down 30%, right? We're going to be tipping people. My kids are going to want to go to McDonald's. You know, there's a whole bunch of things that are going to happen very quickly. And that's, so as much as the GDP, it's like this deep valley, and then it's going to come back. So there's an end point to it. And I think that's a little bit what maybe is getting lost in the message here. So actually government is doing its job, which is when, you know, everybody's calling, you know, the demise of capitalism and the free market. And you know what, there's a point here for regulation where, you know, things just get gummed up. And so the government needs to come in and sort of stabilize it. And then, trust me, they're going to step away as quick as they can once everybody gets going again, and we all are allowed to leave our homes and drive our cars and do the things that we like to do. So I think it's going to come back quick. We can argue about whether it's 2 quarters or 1 quarter, but the size of the stimulus can be scaled back just as quick as it got put in place.
Yeah, I like to, you know, we're evolving as an economy and as a society, because even if you think of circuit breakers. So circuit breakers are in place to stop, to give a pause, a cool down to the stock market when stocks are getting hammered, right? And they only got put in place in 87 because, you know, guys like my dad that were trading were like, what the heck? We fell 23% in a day. Are you kidding me? I wish I could have had a pause, right? Because had the market paused, you know, studies have shown that it wouldn't have been as bad, right? Because people get their senses back, stabilizes, and it's not just selling. So those got implemented, right? You think of quantitative easing, which was really relatively new in the last decade or two. You looked at, you know, you look at the stimulus that they're talking about now, that's all relatively new. So this is, I just see it as our economies evolving, our government evolving. And, you know, this is just, I think, educate, you know, just more research, more education being done as to how to prevent these. I think in the future, like I think this is a blueprint for kind of how to handle it. You know, I don't know if it was perfect or not, but certainly it's impressive how quickly everyone acted, and how positive I think the market has, except for that first drop, how positive the market has reacted to it.
People forget, like, the government's bailed out the auto industry, and the auto industry came back, you know, and you know, I'd have to go check, but I think the government might have made some money on it.
I think they did, yeah.
You know, like we're very quick to forget that the government stepped in, bailed out the auto industry, and that was actually marked the bottom. And you know, so it'll remain to be seen whether or not, you know, certain industries need to be bailed out. And I think the government has also learned that, look, if we're going to lend an industry like the airlines or the cruise industry's money, you can't go by and, you know, pay big bonuses or whatever. It's going to be a loan, and we expect to be paid back. But I think, you know, the economies are, and companies will come back. They're repairing themselves, and I think we're moving in a good direction.
Yes, there's a question coming online here. Whenever we do come back, you know what? Yeah, okay. Whenever we do come back, we are on target for a small fall before coronavirus. When we return to normality, will the market return to make new highs, or will it come back to the mean? Is the question. In other words, some people thought we were trading above the mean on valuations, and you know, does it come to kind of the mean, or do you think it comes back to above the mean?
Yeah, I mean, that's a hard question. I mean, you know, ultimately you're thinking about, I think the way I would frame that is, you know, there's earnings for the index. So right now, a lot of our strategists have pulled their earnings because we have no real visibility on what the companies in the S&P are going to earn. So, you know, the level of an index, or the way to forecast the level of an index, is take the earnings of all the companies and then place a multiple to that. So I think right now people are going to be willing to put a higher multiple on that pretty soon when they start to see some clarity to, you know, the end point in this virus.
On multiples, Kevin, like, aren't you going to have to throw multiples out the window for the next few quarters? Because
I think you're going to have no earnings. You're going to have to look into 2021. But so, I mean, thinking
Forward
about a
multiples.
target, but what I would say is, and some of the work I've sent you, Rob, is, you know, I think we could expect to be back to where we were in the next 15 months. So that's kind of that's kind of how I would guide, is like maybe a year from now, we would get back to where we were on the S&P. And now I'm not anticipating, you know, myself, I would guide to a slow rise, very similar to the way we came out of 87. You know, some people are looking for this big V shape and back up quickly, but I would guide people to more of a U shape, and, you know, getting to new highs in kind of 15 months. So we're talking about probably the middle of next year, getting back to kind of the highs that we broke down from. I think that's a conservative view, and obviously, you know, there's a whole wide range of knowledge of participants, but that's kind of what I would guide to, right, based on what we know right now.
More like a Nike swoosh, right?
Yeah.
Or like a check mark. You dropped and then you're kind of slowly coming back. I want to ask you about one sector here that's coming online is REITs and US REITs and specifically real estate investment trusts,
Yep.
are they all the same? Are there some specific REITs that you have preference to, either, multifamily or, because retail REITs are out of favor now. So retail REITs being like shopping malls and stuff like that, they're really out of favor now. They're really, really beat up bad. Do you see that as an opportunity? The question is, do you see that an opportunity, or would you stick to kind of higher quality multifamily real estate investment trusts?
Yeah, so that's a really involved question for this kind of a show. What I would say is that REITs have underperformed as an asset class, and part of it is, a lot of them went into this with more debt than maybe investors wanted them to. So it really depends on the balance sheet. So I was actually talking to somebody this afternoon who's an advisor who's a really good specialist in REITs, and basically I was listening, I wasn't talking, because they were really frustrated. So for example, there was a REIT that he owns that only has 10% debt on the balance sheet, and there's other REITs that he owns that have 50%, but everything has been sold off as if it was levered. So I think the one, I would say, is there opportunity? Yes. I wouldn't necessarily want to tell you where to go inside the REIT space on a call like this, but I would say there's definitely opportunities. The thing that's, I think, spooked the REITs more than, say, other asset classes is that there's been a lot of high profile kind of articles written about people that are not paying the rent. So we didn't see that in 2008. People continue to pay their rent, and in many ways, 2008, the credit crisis was much more of a, for lack of a better word, a Wall Street or a Bay Street phenomena. It wasn't a Main Street. Yeah. But when you look at this event where you've paused the world, this is very much of a Main Street event. And so as a result, that impacts landlord owners, and specifically REITs, in very different ways. People stop paying their rent, whether you're, renting your place as an apartment, whether it's you're manufacturing something in a building, or whether you're selling something. It's almost indiscriminate. Nobody's paying, right? Normally, you would think in a recession, people make their car payments and they make their, they make their rent, and they go to work and they cut back everything, so they don't go to the mall, they don't go out to eat, right? But in this case, it's across the board, and there's high profile companies that have said, look, can we get a pause here? Then on top of that, the government has said you can't evict anybody. So that never happened in 08 either. So the great thing about REITs is there's hard assets behind them. There's cash flow. I think you need to go through this and pick through them and find the higher quality ones. And what I would do is I would definitely focus on the balance sheet as a starter, because those are the ones that are going to probably be able to weather things a little bit longer. But I think I've tried to give you some reasons why I think the REIT sector has been beaten down more than in 08. 08 it actually held in pretty well. This time it's more of a Main Street issue. It's indiscriminate across the board. And other areas, like you think of, the consumer staples, and specifically grocery stores, these people are hiring people. If you're a medical device company or medical supply company, you're hiring people. So those areas of the market are doing really, really well vis-a-vis REITs and the sentiment around REITs.
Yeah. I'm actually on that point. I'm actually working on getting an infectious disease specialist on my show next week or the week after. Some of the people I know through CMV for their kind of take on the hiring that's going on, the vaccines, the progress, the testing, answer all the questions that viewers might have with respect to how long it lasts, how long the virus lasts on surfaces, and what do I need to watch for, easiest way I can get it, stuff like that. So stay tuned for a pretty neat guest. I had a few other online questions here, but I think we'll wrap it up, Kevin. I'm way over my time here, and partly is my fault because the Wi-Fi stuff didn't work early, but it's going to get better. I forget, sometimes we're in this chair and we kind of just think that, I really, really am thankful for your positive approach today. I'm thankful that you reminded people that we're not going to lose this. If capitalism goes down, well, I'm going down with you guys. Like, capitalism not going to go down. These companies will be profitable. We will see the end of this. We're being opportunistic here. We are buying. We're trying to find bottoms through advice. You know what? You and I, when we talk together, Martin Roberge, who is on Thursday, kind of the experts at CANACCORD, myself, we work together. We figure out a strategy to manage your money, to take advantage of this generational opportunity. It's fun to see 1,600 point days, Kevin.
Yeah.
Next time you're on, are we going to get 1,600 points? Thanks
Guarantee
everyone. Guaranteed. What is that? This third time ever we get one of those days, something like that. Third best day ever.
Yeah.
I'm thankful to everyone. I'm thankful to the viewers. I